this in case somebody actually wants to watch it between now and Wednesday, or getting ready for the fast, or whenever. Okay, so let's make up a new problem to sort of match the first one there on the quiz. In fact, this stuff is obviously on the quiz you can do, right? It's a big chunk of it. It's in multiple choice form, but who cares? So let's say that we had, let's do a beginning inventory, and I'll just call them purchase 1 and 2 and sale 1 and 2, but I'll put them in the order they'd be. Okay, guys? So always look at the dates. Sometimes if you go on in higher level courses, they'll mix up all the dates just to mess with you. Put all the purchases in a row and then all the sales in a row. Look, right, put them in the right date sequence. So this is inventory. So at the beginning inventory, I don't know. Let's have 10 units that cost us $20 each, okay? And then let's say the first thing that happens is a purchase. We had a sale on this one on the quiz, the sample quiz I gave you. So let's do purchase 1 immediately following that, huh? And let's make that be 20 units that cost us, I don't know, $21, okay? And then let's do sale 1, and that's 23 units, and I don't know what they cost, right guys? That's what we're doing here. And then let's do a purchase 2, and let's say that that's 25 units that cost us $22, and then I do a sale 2, and I don't know, that's 22 units, and I don't know what those cost, okay? But I think I'll do one other thing. I think I'll tell you that the sales price of these is $40, okay? You know, we're buying them for 20, selling for 40. You got the idea? Okay? We're buying them for 21 and still selling for 40, I guess. Okay, and let's leave the sales price where it is. Sales price on these is $40. Okay, so that's $40. We can figure out our sales now. Okay, and then let's do a purchase 3 just for the heck of it. And let's make this one last. Let's say this one is that I sold out 3. Let's make sale 2 be now let's leave it 22. Okay, and then let's make purchase 3 be just 10 units for some reason. They only bought 10. And those cost me $23. Okay? All right, so what I'd like you to do, go ahead and work this. What I'd like you to do, guys, because I'm really lazy, I'll sit around and watch it. We need to leave it on the screen, though. What I'd like you to do with this information, okay, we'll split the screen. Display, there we go. All right, let's do this. Give me this is going to be so particular. For periodic, FIFO, LIFO, and average, which will be a weighted average in this case, right? And then, so that's for periodic. And then also, for perpetual, give me FIFO, LIFO, and this one, of course, would be moving average, because it moves every time you buy, right, guys? Moving average. Okay, and what we'll do is for all of it, we'll do ending inventory, okay? We'll do cost of goods sold, and we'll do gross profit. Add gross profit. That's a G, believe it or not. Gross profit. Let's sort of do columns for these. Does that make sense? Everybody sees what I want? All right, and then you're going to give me a number for FIFO, for LIFO, for each of those, for weighted average. FIFO, LIFO, and moving average for each of those. You guys know what I'm talking about now? You're going to give me the ending inventory dollar amount, the cost of goods sold dollar amount, and then the gross profit dollar amount. Okay? And gross profit is what? Sales less cost of goods sold, right? Sales less cost of goods sold, right? It's how much your gross profit is. Okay? That's it. And the sales are going to be the same no matter which method you're using, am I right? Yeah. So if you calculate the inventory cost of goods sold, it's going to be easy. Sales is going to be real easy. So go ahead and give it a shot. See what you can do with that. That should, this would be 15 minutes or something probably on the quiz. I mean, this is a chunk. Maybe more. Maybe 20 minutes. That's a lot of answers, isn't it? 1, 2, 3, 4, 5, 6 times 3, 18 different numbers you're going to get. Okay? So go ahead and work on it. And if you can't get started, put your hand in the air. We'll do it this way. Okay? What do you do first? Be methodical, organized. You know what to do first. Like what I do first is I take the beginning inventory 10 times 20, then the purchase 1, and then the purchase 2, and then the purchase 3, and I have to put signs on each one and know what the total cost was of each one. What do you think of that? Good place to start. That'd be a good first step. Anything? 10 times 20 is 200 for the beginning. Purchase 1 is 20 times 21 is 420. So I do those first, wouldn't you? So you know the totals. Start with that. Then maybe do a T account for units of inventory. Start at the beginning and work your way down to the end. Now you know how many units are in ending inventory, don't you? You know how many you bought and how many you sold. And then start doing it with the dollars, right? Except the dollars you won't know what the cost of goods sold were or the ending inventory. But you know the beginning was the purchase as well. Then if you mind, you can do a little cost of goods sold schedule if you want to use to figure that out. Oh, and you can compute your sales too. What would you do for sales, guys? How about taking $40 times 23 units for the first one and $40 times 22 units for the second one? And then add it together. Or you could just add 22 units plus 23 units. That's 45 units at $40. That's your sales. Get your sales. So I can do that too, right? 7 units per sale. So, $40. That's the units of the price that your sale is, right? And every time I get cost of goods sold, subtract that from the sales, that gross profit. The gross profit part's going to be because the cost of goods sold. Makes sense? It's all mixed in your cost, right? Sales and cost. That makes no sense, right? Sales, you sold it for sales revenue. Cost of goods sold is the major expense of selling it, right? And the difference is called gross profit. If you take away all your operating expenses, you get your net income. Makes sense? Your income statement looks just like this. Sales less cost of goods sold is gross profit, right? Less all the operating expenses, selling and administrative expenses, you name it, is going to be my net income before tax, right? Or just operating income if I have non-operating stuff.
We have to do operating and that's like later.
Next class. Those periodicals fall out really, really fast. Really fast. Perpetual FIFO is what? The same as periodic FIFO. That's pretty fast. Like this. So the one's going to be hard to LIFO. Perpetual is going to be hard to perpetual things. Patience. Everybody making progress? All is or none. We'll go around the room and ask everybody for their number. I'm kidding.
This one was 40% to
The first thing we had was a sale. This time the first thing we had was a purchase, so that'll make it a little different, right? So you're trying to figure out which one you put in FIFO together. Okay. So which ones would I still have? I'd have some of these, right, because I just bought them. And then if I need more, I'd go back to this one, right? That's my second. And then if I need more, I'd go back to this one, right? So on, right?
And so you purchase three to
Well, how many units are there in a minute? You have 20. So which one would it be? From the last purchase, right? First in, first out. The last one, right? Yeah, so the last one, you need to go back. Well, no, I start with purchase repurchase. The most recent purchase, and work with that. Yeah. First in, first out. Which one do you still have? The last one. Then when you do LIFO, what are you going to do? Oh, the opposite. Starts at 10 at the top, and then I guess first one. Yeah, you got it. Yeah. Pretty quick. You also need to know that cost of goods sold, right, guys? So you're going to want to have this, but the cost of goods sold is right there. How are you going to get it? It's going to be cost of goods sold is what? How do you calculate cost of goods sold? No, sales less cost of goods sold is gross profit. How do you calculate cost of goods sold? Beginning inventory plus purchases. Yeah. And you add those together, and what do you have? Available. And then what do? Subtract the ending inventory. Just let yourself use what you know. Stop trying to remember and figure it out. Now that's really hard to do. It always is, and then as things get more complex, you get more and more frustrated, and you quit trying to remember and figure it out. You have to, or you'll never get it. So cost of goods sold. Okay? That's that cost of goods sold number on the income statement, right? Okay? Yeah. And so let's do it for units. Let's track the units, and let's track the dollars. Have you done that yet? You got to get it set up first, right? And if you want, you could do a T account for the units. This might help you. Units in inventory, right? And dollars in inventory. We could do both of these things, couldn't we? And then based on what you have in the T account, you could plug it into this cost of goods sold schedule up here. Or you just put it in the cost of goods sold schedule directly. I don't care. Right? But if it helps you to use the T account, do it. So did you get that far? You did if you got the ending unit. You got that. You have your total cost too?
Yeah.
Right, total cost available? Yeah, but
I got
I don't know if it's right or not, but that looks right. And what's this stuff? No, that's sales. You think sales dollars comes out of inventory? I think sales is debit cash or accounts receivable, credit sales. I'm going to use that up here to, for the sales, and then whatever I calculate my gross profit to be, I'll subtract, and that'll give me my gross profit. I'm getting my answers, right, for gross profit each time. That's what I'm going to use that for. So you don't want to subtract those sales from your inventory. You want to figure out what the cost is to subtract. But how could you figure out the cost if you want? You could figure out the ending inventory, right? You could write down the beginning inventory cost, add the purchases, right, cost, get the available cost. If you subtracted the ending inventory, you got cost of goods sold, don't you? Ah, now you put the cost of goods sold in there. That's how to do it. Make sense? And you were just calculating FIFO a minute ago, and then we were talking about LIFO. If you have the ending inventory, you get cost of goods sold, can't you? Good. Don't memorize the process, guys. Know what you're doing. You got answers for all of them?
Nah, I'm still working.
You just weren't writing anything or doing anything. You just thinking.
Nah, I was just thinking.
Okay, you need some help.
I'm just working on the perpetual average for all of them.
Oh, you're into the perpetual moving average?
Yeah.
Okay. What you need to do on perpetual moving average is just think about where you start, what the average is, right? Beginning average. Every time you buy something, the average changes.
You have to do that?
You have a new average. So when you purchase one, you'll have a new average right then. You have the average of 20 and 21. 10 and 20 and 20 and 21. So you have a new average. It's going to be $20.67, right?
Okay, that's not confusing.
And then your sale is going to be a that average. You don't have to calculate an average again. But then on purchase two, you got a new average. You're on. Good. Anybody else have their hand up? Oh, round everything to nearest dollar, guys. Let's try to pass otherwise. Sorry. Somebody else had a question? Was that it? I don't say any quit, which I probably didn't, well, it's multiple choice too, I guess you'll have to wrap it in here as one.
Yeah.
It's making progress here, right? Let's click it, click it. Okay, when you get perpetual LIFO, remember perpetual LIFO is exactly the same as periodic LIFO. Oh, the moving averages? Okay, what do you do? You're starting with 10 at $20, so my average is 10, isn't it? Yeah. Right? Then the first purchase, you're going to have a new average. So I've got a total of 30. It cost me 200 plus 420, right? 620. Divide 620 by the 30, you got your average. And when you sell them, they go at average. Yep. You keep going. You got it.
So you sell at that average.
The cost is at that average. The sales price is $40, but the cost is at the average. The cost is, the sales price in perpetual moving is always the average. I'm sorry, the cost is always the average. Right? So the only time the average changes is when you buy. Does that make sense?
Yeah. Or no, you sold.
The next time. So now you're going to have a new average, right? Yeah, because we bought 25 at 22, so if you buy it for 22, it's going to bump the average up.
So do you, before you do the subtraction of the 22, do you add the 25 first?
No. These are in date sequence.
Oh, okay.
They're in date sequence. You have to keep them in date sequence. If the purchase came first, you do it first, right? Okay. Sale comes first, do it first. I'm sorry, I said it was in date sequence, but I said a lot of stuff. Yeah, they're in date order. I left them in date order for you there. On a quiz, you'll take the dates that are given to you, but I'll put them in date order in the quiz. I'll mess with you later in intermediate. You're crazy enough to take that. It's only about 2 to 3 times as much work as it's got. Beginning inventory plus purchases is available, not plus available. Okay. Step away from it, right? It's not a formula. Again, it's everything's a formula. What I start with plus what I buy is what I have. Right? Available. That's available. Beginning inventory plus what I bought purchases is what's available. If I subtract what I have left at the end, that's what I don't have. And what I don't have is cost of goods sold. So it's beginning inventory plus purchases equals available, right? Minus ending inventory equals cost of goods sold. So it's right here. This plus this is available. Less that is that. Or this plus this is what's available. Less that is that. I don't care. These two have to equal what's available. Would you agree that everything you have, you still have, plus what you sold, right? The cost of what you sold has to be what was available. Over there. You're letting it become a formula for you. Don't do that. Don't do that. You don't need it. Yes, it is a formula. But don't think of it that way. Think of this concept. Be better off. Got them all? Cool. How many have them all done? 1, 2. They're coming on. You got them all figured out. Try to 3 more minutes. Any new assistance? Some of your rescue for being here. Why not? That's the real truth. But he saved me. Doing it myself.
Periodic is just really simple. And you bottom all the way through. And actually, it's really driving through which one is in inventory. Versus perpetual, you have to actually contract each layer. Not
Perpetual LIFO?
moving every year to keep the layers in and then keep the calendar. Like you're doing it, you're breaking it down into each step. So that makes sense to do like that.
Periodic is sales format. How many units do you have a unit?
Like then if selling, like let's say sell 20, well, first you're gonna sell all.
So which 20? So under periodic, which 20?
So you'll start with 3 and 9.
Alright, so FIFO, first in, first out, when do you get? Which are what? $10 and $23. And go backwards, for next purchase, 10 and 22. So you don't afford that. Does that make sense? And it gives you exactly the same answer as periodic for better. But what you did there was perpetual, but you don't have to isolate. You're always selling those stuff, right? Okay. Now then, LIFO, what we do is periodic. I need the first one that I bought. Which ones are those? No. I pretend I bought everything before I sold it. That's perpetual. You have 7. What would you do for periodic? For periodic, you pretend you bought them all, and then you sold. So we're pretending we sold those at the purchase agreement. Periodic. Yes, we don't keep track of when we bought something, when we sold something. So it's at 21. So what we do is we go back to the very first one we had, which is I need 20. So I take 10 from the beginning inventory and 10 from the first purchase.
Yeah, that's what I did.
So you've got the hard one, you don't have the easy one, right? Does that make sense though? You just go back. And then for the average, what you do is you take your total cost available and divide it by the units available, and I get your average, right? Okay, this is for periodic. That's the periodic average. And then you take that and increase the inventory. Yeah. And you times that price, that cost, right? That's it.
And then gross profit is just
We'll do it 20 on.
11, 22 times.
Okay? Everybody ready to give it a shot? How would you start this? What would you do?
Don't tie these by it.
Yeah, let's multiply it out, huh? What's 10 times 20? Everybody did this? 200 beginning inventory? Okay, so I think I have 10 units, $200 over here. Would everybody agree? If you want to do it this way, you could say I start with a beginning inventory of 10, and the beginning inventory in dollars is 200. I don't know that I'd do both the T accounts and the schedule here. Does that make sense? I'd probably do one or the other. But you're welcome to do both. It's fast. If you screw it up without doing both, do both. Huh? I don't care. All right. Then what happens first? Purchase 1. What's that? 20 times 21 was 420. Is that right? Yep. And there's one other purchase, right? Purchase 2. How much is that? 25 times 22. How much is that? 550. Okay, so, and then, there's purchase 3, too. Let's do that one. Is that $230? Is everybody with me on this? And then, we know the sales price, but we don't know the cost. And what we want is the cost, of course, right, to come out of inventory. You're going to debit cost of goods sold and credit inventory for the cost. Everybody agree with that? That's not for the sales price. But we can do sales if you want. What's sales going to be? So we have sales for later when we want to calculate gross profit. How many units did they sell? 23 here, right? Plus 22 here. How many is that? 45 units? Yeah. And what's the sales price? Yeah. What's $40 times 45 units? How much? $1,800. Okay, excellent. That's my total sales. Everybody agree with that? This one's $1,800. I know it, right? It is. Right? Sales is $1,800. And we're not going to have to do operating expenses or netting. We're only going down to gross profit, aren't we, guys? So we don't need that lower part there. That was just to show you where to put it. Okay? All right, cool. So let's see. What happens first? Purchase 1, right? Was how many units? 20. What'd they cost? Well, total though. 420. Look good? So we know where we're at, don't we? And then what happens next? Sale 1, which is 23 units, is that right? But we don't know what it cost, right? Sort of the way this thing works, isn't it? Okay? Then what happens? Purchase 2 is the next thing in date sequence, right? How many units? 25. What did they cost in total? 550. Oh, okay, good. Dollars. Okay, anyway, then what happens? We sold 22 units? Sale 2, is that right? We don't know what those cost either. That's what we're doing, is trying to figure out what those cost. Mission impossible, right? Okay, anyway, funny. All right. So then what happens? Purchase 3, how many units? 10, what'd they cost? Total of 230 bucks? All right, fantastic. Okay, so what we want to know is what is this cost here, right? That's going to be the cost of goods sold. It's debit cost of goods sold, credit inventory, isn't it? We want to know that. And we'd like to know our ending inventory, right? If I knew my ending inventory, I could get my cost of goods sold, couldn't I? That's the trick, okay? So let's do this. How many units do we have here? I don't know the dollars, but I do know the units. Let's see, I started with 10, right? I bought 20, how many did that give me? 30. I sold off 23, how many do I have left? 7. Then I buy 25, 32. Then I sell 22, 10. Then I buy 10, where am I at? 20 units, big deal. I am going to value those 20 units, right? For my ending inventory. That's what I want here. That's the number that goes here. You guys with me? And then the number that is for these cost of goods sold must be what? The ones for these that were sold. How many units were sold? 45. And we already knew it was 45, didn't we? Right? We did the sale. Okay. So how many units were purchased? 20 plus 25 plus 10. How many is that? 55. What did we pay for them? 420 plus 550 plus 230. What's that? How much? 1,200. Thank you. What's the available, guys? How many units are available? 65. Whoops, that's units. Way to go, Keith. Units available is 65, isn't it? Okay, how many dollars is available? Looks like 1,400. Excellent. Everybody got it? This isn't hard, is it? Just relax. Don't memorize. Just let yourself think, right? Let yourself think. I know there are a lot of computations, but each one is simple, isn't it? Okay, just let yourself be organized. Okay? All right, what's ending inventory in units? 20 down here? Well, how many did we say we sold anyway? Didn't we say we sold 45? Didn't we say we sold 45? So the ones that are going to be in cost of goods sold are the 45 units, right? Okay, so my task is to find this dollar amount and this dollar amount. It's easier to get the ending inventory than to get the cost of goods sold, right? Just is, right? Imagine there's 20 in ending inventory and we sold 1,000. Got the idea? Okay, you don't want to value the 1,000, a whole bunch of sales. Just value the ending inventory. So everybody good so far? Happy? What do we do then? Let's do periodic, okay? Start with periodic, because they're easy. Okay? Let's do FIFO. How does that work, everybody? Periodic FIFO. We have 20 units left. First in, first out. Which ones did you sell first? The beginning inventory. Then the first purchase. Then the second purchase. Yeah, first in, first out. Which ones are in ending inventory? The last ones you bought. So I want the 20 last units I bought. I pretend with periodic, I pretend I bought everything and then I sold. Because I don't keep track of when I bought it, right? And I don't keep track of when I sold it. I just count the inventory at the end of the period, right? And I do record my purchases to a purchases account, so I know what I bought. This making sense, guys? So I'm calculating cost of goods sold, okay? So what am I going to do for ending inventory for FIFO? What's it going to be, everybody? How many units do I need? 20. And what is the 20 units going to consist of? First in, first out. My last purchase was what? 10 units. Take the last purchase, 10 units, right? Everybody agree? It's these 10 down here. Isn't that the last purchase? 10 units at what? They cost 22? Is that what they cost? Oh, 23. 230 bucks. There it is. Okay? They were 23, weren't they? $230. That's not enough units. My ending inventory is 20 units. What do I need to do, guys? Get another 10. So let's go back to the purchase before that. And the one before that if I have to, and so on. Okay? Well, the one before that was 25, wasn't it? So that's going to work out good. I only need 10 of those. How much?
$22.
They cost $22. Fantastic. How much is that? 220? So what do we have for ending inventory? 450. Okay, now what do I want to do? That's my ending inventory, right? What do I want to do for cost of goods sold? Just plug it in here, huh? There's just nothing to it. How about if we put it right there? What do you think? Are you going to work? So what I could do is I could put 450 here, and if you had 1,400 available, right, to sell, and you sold 450 of it, that's the cost, not the sales price, right, guys? So what would we have? What's the cost of goods sold? It's 950. Of course it's 950. Okay? We're there. All right, I want one more thing. I want gross profit. This is too easy to believe. What am I going to do with that? My sales are at 1,800, aren't they? What was my cost of goods sold? 950. It is, isn't it? What's my gross profit? 850 in the world I live in. Okay? I'll tell you what. Let me ask you this. How many of you have those three numbers down? Total abject failure again. Not total, there are a few people got it. Can you do this? Yes! Right? Let yourself think. Let yourself practice. When do I expect you to know this? Oh, the day after tomorrow? But you know what? You guys are getting to see you can do this, huh? You can learn that fast. Yes, you can. I know you can. Don't be angry about it. Just do it. Okay? And you're going to feel really good later. Really good later. No kidding. Okay? It's going to pay off. So if you don't have it now, big deal. That's why we're doing a review session, right? There's all kinds of time. If we're working on a job and we don't have it done yet, what do? Do it. Do it. Under pressure of deadlines. It's awesome. I've worked till 4 in the morning before I do stuff. It's annoying as hell. You know what? After about 10 or 11 hours in a day, you're worthless. We keep on working anyway. How stupid is that? Charging people for your time. You should just go home. Yeah, anyway, at some point you do. Give up. You know what? What's really cool if you got these three answers is you also have something else. We have periodic FIFO. What else do we have? Perpetual is exactly the same answers. And the reason perpetual FIFO is exactly the same as periodic FIFO is you're always selling the old stuff, and you only keep the new. So, of course, it comes up the same, right? If you did it, you did it that way, didn't you? You got the same numbers, didn't you? This is easier, isn't it? Faster. They're both easy? Okay, I'll take it. They're both easy. Yeah, all right. Okay. Work with it a little bit. Okay, so let's try periodic again, but this time let's do LIFO, guys. What's LIFO going to look like? Well, okay, you got an ending inventory, don't you? How many units are in ending inventory? I mean, it's the same company. They're just using a different accounting method. How many units in ending inventory, everybody? 20. Let's do 20 of them. Okay, the last purchase was, no, that's the last purchase. What did I do with the last purchase on LIFO? I sold it, right? And the one before that I sold. Which ones did I keep? I pretended I bought everything, and then I sold the most recent purchases. This is impossible. They couldn't have sold the last 10 they purchased because they didn't have them yet. Now remember, you're not keeping track of when you bought things or sold things. So we pretend we sold it. Okay? I'm not kidding. All right? Silly, but we do. All right? So purchase 3 got sold. Purchase 2 got sold. What do we keep? The beginning inventory 10, and what else? 10 from the first purchase, and that's all there is to it. Okay? Real simple. Okay? By the way, it's really important for you guys to know this LIFO stuff because it's out there. It makes a difference in how much income people are reporting, and you're going to invest your money. Do you want to convert to FIFO in the financial statements? Oh, yeah. Do you want to use LIFO, though, to save tax dollars? Absolutely. Okay? So we got to know what the game is here. Okay? It's kind of a game, too, in a way. So how many units do we have from our first purchase, beginning inventory? 10. What'd they cost, though? $20. It's the first ones were 10, and $20 is 200, right? Excellent. So we got $200 there. And then what do we have? 10 more from our first purchase, and what'd they cost us? They were 21, weren't they? Fantastic. $21. And that's how much? 210? Yeah, well, this is going to make a difference in your ending inventory, isn't it? It's going to be $410 instead of $450. Everybody got the idea? And then what we do is we figure out, so that's our ending inventory. We're going to figure out cost of goods sold, but guess what? It's the same process. Let's get rid of 450 here and put 410 there and see what happens. Okay? Obviously, if you have less ending inventory and you have the same available, 1400 less 410 is what? Is that 990? We have more cost of goods sold if we have less ending inventory. Everybody agree? Because obviously 990 plus 410 has got to be the 1400. What you have left plus what you sold has to be what you had. Everybody got this? And when the numbers start moving around, you can, oh my gosh, it's hard. But if you see it, once you see it, it's not a big deal. Okay, so what's my cost of goods sold, everybody? 990. Excellent. What's my gross profit? Yeah, all I'm going to do is I'm going to put cost of goods sold was 990 instead of 950 over here, right? Make that a 90. Very good. 990 away, whoops. 990 less away from the 1800 is what? 810, is that what you guys got? Sounds good to me. Okay, where'd it go? Okay, so my gross profit would be how much? We got 810. Okay, there we go. We're on our way. Notice the sales didn't change. Yeah.
So on that one, the numbers shouldn't match up between perpetual and periodic license.
No, it will not.
Okay.
It will be different.
Only on.
And the reason is we pretend we bought everything before we sold anything, and in perpetual you're selling off the layers. That's why you have to do the T account on perpetual, right? Or something. You got to keep track of the layers instead of the T account, but you have to do layers, okay? And for FIFO, you don't have to bother with the layers unless you want it. That's okay. Okay. All right, you guys, let's do the other one. Let's do periodic average. It's going to be weighted average, right? This is too easy to believe, too. This one's not bad. I want you guys all to get these points. Don't give these away. Okay, so here we go. We're going to do weighted average. So let's get a new cost of goods sold, don't you think? And let's get a new...
For the LIFO that you just did, is that periodic? The 410, 990, and 810?
Oh, yeah, that's periodic. Absolutely. That's periodic. The only one that's perpetual and periodic are the same as on FIFO. LIFO, that's periodic. I'll write it down here in a second. Thank you for that clarification. Yes, it is. Okay. Okay. All right. So, yeah, this is periodic LIFO. And then weighted average is periodic. You can't get a weighted average until you bought them all, right? Okay. So, what's the total units that I have available? 65, right, everybody? What's the total dollars I have available?
1, 2, 3, 0.
No. That's the ones I bought. 1,400 available. I've got to have them all, right? So my beginning inventory was 10, right? That cost 200, and then I have 3 purchases that totaled 55 units, and that was $1,200. Everybody agree? And so what I have available to sell is 65 units that cost me $1,400. Everybody good? Okay, I want to know what the average cost was. That's it. Be sure and include the beginning inventory, both the units and the dollars, right, guys? That's where people screw this one up. Okay? So yeah. So what am I going to do? I'm going to take my total cost for what's available of how much? 1,400. I'm going to divide it by the total number of units I have available. What's that? This is available, right? Dollars and units. How much was it? 65 units. Everybody see what I'm doing? It's this 1,400 here, and this 65 units here. See it? Everybody's got this. See what we're doing? All the units, right? And all the costs for those units. What's the average cost then? Per unit, what is it? Well, let's go out to a few pennies on it, and we'll keep it for a while, and then... Actually, we'll keep this one permanently. Yeah, let's keep the 25. And this one I'd keep it because then I don't have to worry about rounding, right? But if I'm doing moving average or LIFO perpetual, I'd go ahead and round that, okay? All right, this will just be easier if you don't. So that's what every unit costs. How many units do you have in ending inventory, everybody? What was it? In ending inventory? 20, right? 20 units. What did they cost? $21.54 each. Take 21.54 times 20 and you've got the ending inventory. It's just like that. How much is that? 430.77. Okay, I round now. 431 sound good? Okay, it's 431. If I plug 431 in here as ending inventory, what do I get for my cost of goods sold? Is that 969? Is that right? Everybody good? So my cost of goods sold, I think it's 969, but let's prove it to ourselves. How many units did you sell? How many did you sell, guys? 45, right? Answer all the questions. You don't have to out loud, but answer them to yourself. 2154, right? What's 2154 times 45? Is it real close to 969? Yeah, rounds to it. Got it? These two obviously have to add up, right, to the total that was available, and it does. Okay, so what would gross profit be, everybody? What would you do? You go back over here and plug the cost of goods sold in with the sales, right? What was the cost of goods sold? 969. What's 1,800 less 969? 831, is that what it is? Okay, 831. You know what? That 831 is about halfway in between, approximately, right? Somewhere in between the 850 we had, right, for FIFO and the 810 we had for LIFO. Well, yeah, it's an average. Yes, sir.
So could you have just added 400 to your ending inventory and got your gross profit for all those?
Add 400 to your ending inventory.
And you get your gross profit for all three of those.
Let's think about that. To the ending inventory 400, that may be, mathematically, does that make sense? Because the sales are always, that's only because the beginning inventory was the same in all of them.
Gotcha.
If it was a real company, no, don't do it that way.
But in these,
I wouldn't do it that way. I would make that subtraction. Later, it'll screw you. Okay? The beginning inventory is different. That wouldn't work. Okay? All right. It's just mathematically because the beginning's the same. So the only difference is the ending. Okay? Same inventory. Yes, ma'am.
To find the averages, I took the FIFO and LIFO together and divided those two, and the numbers came out the same.
You took the FIFO and LIFO and added the two together and divided by 2. That's only because I have 10 units at the end that I bought, 10 units at the beginning. Don't do that either. Okay? Don't do that either. Also, do not take, that's coincidence, do not take the values of the inventory that we bought. What was it, 20 bucks, 21, 22, 23? Don't add those 4 together, right, and divide by 4. Don't do that. That's not a weighted average, right? That's just a pure average and it'll screw you. So don't look for shortcuts like those. Okay? Won't work. Just in the heart of the cat. I need a shortcut, I cannot get it. It's pretty quick to do this, really. You know what you're doing, it's not bad. Okay, so what do we have left? Perpetual FIFO and regular FIFO, right? Periodic FIFO are the same, right? So what do we have left? Yes, sir.
Why was the FIFO and two FIFOs like the same year?
Because what you're always doing is selling the most recent ones. I'm sorry, selling the oldest ones. So what I would do is I'd sell these first, then these, then these, then these. Whether I'm doing periodic or perpetual wouldn't make any difference. Right, I'm always selling those, so I'll always have these 10 left and then 10 of those. Do a key account and do it. If you did it perpetual, get the same answer. And you're always selling that oldest stuff. Your laters are only the new stuff. Not really laters, but. Okay, so let's give LIFO a try, everybody. Let's see. Back over here. Middle. Okay. So I think what I do is the key account for perpetual LIFO. Okay? Inventory, of course. All these are inventory, right? Okay. And this time we're actually calculating what the cost of goods sold journal is going to be. Right? With periodic, you don't make a cost of goods sold journal entry. Just adjust the ending inventory, right? From where it is to where it's supposed to be. From where it was at the beginning to the end. Okay, good. So let's give this one a shot. Beginning inventory is what? How many units was it? 10 units. What'd they cost? $20. How much was that? $200. Okay, so there's where I'd start. Then what's the first thing that happens? Purchase one. The first thing in date sequence is purchase one. How many units was it? 20? Same deal, right? These 20 units. What'd they cost? $21. I have 2 layers of inventory right now. 210 is that, or 420? Sorry, 420, wasn't it? That's good. What I did there? Okay. Okay, 420. So what I've got is 620 of inventory. Would you guys agree with that? 200 and 420? And that represents 30 units. I've got 2 layers. 10 units at $20, 20 units at 21. Again, if you were doing FIFO, which one would you sell first? Well, if you were doing FIFO, which ones would you sell first? Yeah, the older ones, right? The 10 would go first, and you just keep the new ones. You see why they're always the same? Then you go with it. But which ones are you going to sell with LIFO? If I have a sale now, the last ones I bought. Okay, that's it. So I'm going to have these layers to keep track of. So this is kind of annoying, okay? So sale 1 is how many units? Yeah. Sale 1 was how many units, everybody? 23, right? So that's 23 right there. Okay, so it's 23 units. Which ones? Last in, first out. Which ones did I sell? The ones I just bought. 20 units that cost me $21. That's 420, right? So the math is really easy because you've already done it all, right? That's 420. And then how many more units do I need to make 3? 3. I think so. 3 units that cost me how much? I'm going back to my beginning inventory and selling off some of it. Everybody see it? So it's going to be 3 at what? $20, which is how much? $60. So what's my cost of goods sold here? 420 plus 60 is how much? $480. Is that right? Yeah, but what? 480 is 60 and 420, right? Debit what? What is it? Debit cost of goods sold. Credit what? Inventory. Fantastic. So that's the 480 cost of goods sold. We just calculated the journal entry. What's left? What's my LIFO layer? How many do I have left, you guys? I have 30. I sold 23. Come on, it's 7 units, right? Which ones? From that beginning inventory, because it's last in, first out. It's 7 of these $20 ones, isn't it? How much is left in inventory right now? $140. Tell you what is 620 that was available less 480? It's 140. It's a miracle. Got the idea? Everybody see it? It's not hard, is it? Then what? What's the next thing that happens? We did sale 1. We did purchase 1. We did sale 1. What about purchase 2 next, huh? That's what comes next in date sequence. How many? 25 units. Okay? What'd they cost? $22, wasn't it? All the $21 ones are gone. We don't have that LIFO layer anymore. Got it? Sold them all. So what's 22 times $25? Or 25 units times $22? We already calculated it, didn't we? Know what was it? It was $550. We've got it. So once you have it, you got it made, don't you? So now how much is our inventory, everybody? You know, 140 plus 550? 690, isn't it? How many units is it? 7 and 25, it's 32, right? Everybody got it? Okay, so it's 7 at $20 and 25 at 22. Which ones am I going to sell first? Last in, first out. The most recent one's the 25 we just bought, right? So what's the next thing that happened? What did I do to you next? We sold some. What was it, 22 of them? So this time I'm going to sell 22 units. Sale 2 is 22 units. This one's a little easier because the last purchase was 25, so all of them cost what? $22. Everybody agree? It's these I'm selling, isn't it? I got 25 of them. I only need to sell 22. I'll have 3 of them left. What's $22 times 22 units times $22? What is it?
484.
484?
Yep.
Debit what? Cost of goods sold. Credit what? Inventory. We're brilliant. Okay, what's left? 2 layers. What do I have left, you guys? How many units do I have left? I had 32 available and I just sold 22. How many do I have left? 10. Okay, and I'm just going to try to figure out which ones, huh? What do I have left? The 7 from the beginning inventory. I never depleted that layer, is what we'd say. That's 140 bucks, isn't it? And then I have how many more? Yeah, you had 25 of these and sold 22. How many do you have left? 3 units. That's the 10 units, isn't it? 7 at $20 and 3 at what? $22. Fantastic, everybody. 66 bucks. So I have 10 units that cost me a total of what? $206. I know exactly where I'm at. Everybody good? Okay. And obviously, $690 less 484 must be what? 206. Did it work? This was 690. We took away 484. It should be 206 left. Did it work? I think so. Let's hope so. Right. Okay. Then what happened? One more thing. Purchase 3. How many units was it? 10. What did they cost? 23 bucks these were. So I've got inflation going on here. We could have deflation. Prices could go down, right? They could go up and down and up and down. It doesn't matter. You just track whatever they are. Okay, so what's that going to be, 230? Okay, so what do I have for my ending inventory here? How many units? I got 3 layers, don't I? I got 7 at $20, 3 at 22, 10 at 23. Can you imagine companies might get a lot of layers? Annoying without a computer, wouldn't it be? Right? With a computer, big deal. Who cares? The computer doesn't police. So what do we got? 20 units. That was supposed to be our ending inventory, wasn't it? That's how many we thought we had. It's still how many we have, of course. What's the total in ending inventory? 140 plus 66 was 206, right? And we just bought 230 more, so what do we got? 436, is that right? Is that the number you guys got?
Yep.
140 plus 66 plus 230, is that right?
Yep.
Okay. So this ending inventory is 436. What's total cost of goods sold? How about 480 and 484? What is it, 964? Let's see if this worked good. See if this worked out. Plug it in over here, huh? If those ending inventory units cost me, this is a good use of your time, you guys. It's going to pay off big. 964. 964 away from 1400 is what? 436. It's a miracle. Tied out perfectly. Of course it did. How many had those? 2, 3, 4. Snipers? Yeah, you would have had it. I'm sure you would. Yeah. Confidence is important. It's the first step. Sometimes the first step to losing. Hey, did you guys see Oregon beat Utah? Now, usually, who cares if Oregon beats Utah? It's a new team in the Pac-12, one of the new teams, and they're number 9 in the nation. So Oregon's actually going to make the tournament and lose in the first round. But anyway, they're going to probably get in. They've only got 3 more games. Are you guys happy? Do you care? We're talking about basketball now. Is U of L going to make the tournament?
Yeah.
Oh, man, they got to knock it off, right? Yeah, they will. But they beat some good teams, but boy, they're not good enough in the league, are they? Not as good as we thought they were.
It's not perpetual life, or FIFO.
Perpetual FIFO is exactly the same as periodic FIFO, so I don't bother to do it that way. As soon as I have periodic, I just write down exactly the same answers for perpetual. And you know what the reason is? You're always selling the oldest ones and keeping the newest ones. So try it both ways. Do it both ways and you get exactly the same answer, and then probably you'll never do it with the key account again. Right? Okay? So when we're done, we can stick around a little bit. Do the beginning of this if you want. Because you came late, you know. Probably had a class or some ridiculous thing like that. Okay, anyway, I don't know why you guys have other classes. So what would be the gross profit now? Can you guys do the gross profit? How could you not, right? The sales don't change, of course, right? Once you got your sales, calculate them carefully, obviously. But once you got your sales, it's no big deal, right? The sales are 1,800. Uh-oh. I did it again. Okay. What did we just say our cost of goods sold is? 964, right, everybody? So what's 1,800 less 964? 836, is that right? That would be my answer for that. So my gross profit, to go with those, would be 836. Right? Are we good? Okay, so then let's try the last one. Okay. There's the original problem if you guys want to look at it that just got here. Started on. Okay, so let's add these. Okay, let's do moving average, okay? It's moving because every time you buy something, you have a new average, huh? And this is perpetual method, right? All right. What I want you guys to do tonight, hopefully, certainly tomorrow morning, is do a problem like this again and crank all the way through it and get it to work. Do this exactly if you want. Then do the one that's on the quiz, right? And make sure they just fall out. It just falls out. You don't have to think about it. Just boom, boom, boom. Falls in place. And you'll have it made, okay? And that is most of the quiz on the inventory chapter. There's some other multiple choice questions too, but they're not too bad. Okay, so what do we do? Beginning inventory what? How many units do we have in the beginning inventory? Happens to be how many? 10 at 20 bucks, right guys? What's my average right now? Don't think too much. It's 20 bucks, right? What if I sold some right now? What's the cost? 20 bucks. What if I buy some and they cost a different amount than 20? I'll have a new average. That's all. Every time you buy some, you get a new average. So what's the first thing that happens? Purchase one, right guys? How many units was it? 20 units this time? So now I have 30, right? What'd they cost? 21, which is how much? 420, right? So it's nice to figure that out to begin with. And now what you'd do is you'd say, okay, I've got 30 units that cost me how much total? 620? Can you calculate for me what the average cost is? That's all you got to do. And every time you buy them, you have a new average cost, okay? So what's 620 divided by 30? $20.67. Is that right? Yeah, because we have 20 of these and 10 of these, so it's 2/3 of the way, right?
How do you want us to round this on the quiz?
I don't think I'd round that. Well, to a penny or something, to the nearest penny. I don't think I'd round that. You just make your numbers come out nicer, right? Each time I calculate, they're all round to an even dollar, but I don't think I'd round that. I don't think I'd bother with that, right? Keep the decimals. It'll make life work better for you. Then what happens next? If there was another purchase, I'd add it and do another average. Sound good? So if I give you 2 in a row, big deal. You don't care. Okay, if I sell them, though, it's just at the average. So what's sale one? How many units was it?
23 units.
Yeah, 23? There it is, okay? 23 units? What'd they cost, guys? $20.67, right? Excuse me. How much is that? $4.75. And you rounded that off. It's not exact, but that's good enough. We get the idea. Okay, what do I have left? How many units? Of course, it's still 7. It's the same company, right? 7 units. What's 7 units at $20.67? Bet you anything, it's 620 less 475, which is what? 145. Is that what that is? Is that a correct statement? Yeah. 144 and a bunch of pennies. So about 145. Sound good? It's easy. Then what happens next? I think it's a purchase next, right? By the way, what if I sold some more of those 7? It costs $20.67 on average. Just take them out, right? Oh, by the way, what is this entry? Debit what? Cost of goods sold. Credit what? Inventory. Yeah, if I actually make the journal entry, can you guys pull that off? I'm a funny guy, right? I might. I do that time to time. So I can tell you know what you're doing here. Right? You're just calculating the journal entry. Okay, then what? What's purchase 2? 25 units? Now I think I have 32, don't you guys? Absolutely. Okay, how much do they cost? $22 each. What's $22 times 25? Used to be 550, I bet it still is. Okay, what's 145 plus 550? 695. I have $695 worth of inventory, cost of inventory, and it's 32 units. Can you divide 32 into 695 and find what the average is? I get paid for this. It's ridiculous. How much is it?
21.7.
21.70.
Yeah.
Okay. $21.70 with a zero on there, right? It's not. It is $21.7, but I've never heard anybody say it that way. We say 21.70, don't we? Right? I love it when students give me dollar amounts and pennies, and they give me one decimal place, and I'm like, what? Is that how you guys count money, really? Yeah, I think it's 21.70, right? Or when you give me 8 decimals, that's pretty good too. I just wanted to know how many dollars it was. Really? Okay. Although you do care. If you're doing it a million times with somebody, I think you care about all those decimals, don't you? Yeah, it's a million times. Okay, anyway, now what do we do? I think the next thing was a sale, wasn't it? How many was sale two? 22 units. I bet it's 22 of those that cost me what? 21.70. It's easy. So take 21.70. You can even leave it in your calculator, and there's less rounding to worry about, huh? I don't care. 22 units times 21.70. How many dollars is it?
477.40.
So we'll just round it to 477. Journal entry? Debit cost of goods sold. Credit? Inventory. Even I can do it. Okay, what's the inventory at this point? 10 units that cost me what? 21.70. But then I did it, and that was how much? 695 less 477 is what? 218. Is that what that is? Is that right? 695 less 477? 218? Ah, so what's 10 times 21.70? Didn't work. What happened? Did we do that right? 32 units, 695 divided by 32 is 21.70, really? What's 22 units times 21.70? Is it really 477? What's 22 units times 21.70? 477? And this was 695? 32 times 21.70? Is that real close to 695?
Yeah.
We calculated right? Okay, what's 695 less 477? 218. Oh, that's 21.70. I guess it's close. 10 would be 217, wouldn't it? It's only $1 off. It's rounding, okay? I looked at it weird.
Like the 695 is 694.4.
So this should be 694, really? Yeah. Okay. Good enough? Everybody see what's going on? It's just rounding the buck. Okay? So we're about 218. Okay? Now what? What happens last? Purchase 3. How many?
10 units.
10 units. Gee, it's amazing. That's going to give us our 20 units. We're thrilled. Okay? What'd they cost?
$23.
$23. What's that, everybody? 230. What's the total we have now? 448, not 2. 448. What's that?
22.
My ending inventory. Yeah. And you can divide 20 units into 448, and what do you get? 2240. And if I were to sell some more, what would I use? My cost. 2240. And we just go on forever. Of course you wouldn't. Let's hope you go on forever. You're in business. I make money. Okay, this is debit cost of goods sold. This is debit cost of goods sold. So what's the total cost of goods sold, everybody? 475 and 477. What's that? 952. Ta-da! Let's make sure it's right. What would you do now? Remember 952 and 448. Let's make sure we're right. 952 and 448. Where did I do it at? There it is. Right here, I think. Yeah. 952 and 448. So let's get rid of our cost of goods sold here. Let's get rid of our gross profit there, and we'll put in the new ones. And then let's get rid of our ending inventory and our cost of goods sold there. Sound good? Okay, everybody. What do we got? What was our ending inventory? 448. What's 448 away from 1400? 9. Were those the numbers we just had? They are. It's a miracle. Okay? So we know what we're doing. And then what would you do to get your gross profit? How about take the 952 and plug it in here? 952 away from 1800 is how much? 848. 848. can do them all, can't you? So if we go back to that original question, there it is, right? If we go back to this original question, could you fill all that in? We just did, didn't we? We know the ending inventory for every single one of them, cost of goods sold for every single one, and gross profit for every single one. Big deal. These are free points, aren't they? I think they can be. How many of you got it all? How many of you how many got the top half at least? Getting better, okay? Think you'd be in position to do the bottom? Oh, by the way, how many of you got this one and did not get that one? You don't have to admit it, right? But that's terrible, isn't it? If you get this, you got to be able to have that. Same answer, okay, all the way across. So, okay. You good? It's going to be in a multiple choice format, but it's no big deal. It's the same question. Same idea. All right, I guess we'll do something else, huh? Man, that was slow. Is that worthwhile? Crank through it one more time. Make sure you do it too, right? A couple times, you'll be fine, okay? It's really not that hard. Okay, what else we got? Depreciation, maybe?
All four.
Let's try number 3 first on the quiz. On that 5 through 7 quiz. Try number 3. Let's do that. Did you take a look at that?
Said 5 through 7. So
On quiz, the printout from the summer 5 through 7. The summer one. It was quiz 5 through 7 in the summer 2013. We just did a similar one to number 1 I made up. Take a look at number 3 on that quiz. That's an inventory question too. There were only 2 inventory questions there. Oops.
oh yeah, it's not good.
No, I did it. Right, let's try that question. Go ahead and read it. I'm trying to figure out what I'm doing here.
XYZ company's ending inventory in 2012 was understated by $3,000. The ending inventory in 2013 was overstated by $5,000. These indicate the effect of these errors on XYZ's financial statements.
This is just one of those overstatement, understatement deals, right?
They take the dollar amount and overstate
Yeah.
it.
Okay, listen to this really carefully. This is brilliant. The ending inventory of 1 year is the beginning inventory of the next. You guys know that, right? No time happens in between. The quantity of inventory items, all the different inventory items we've got, right? Whatever's in the Kroger store at the end of the year, a millisecond later, it's still there. Okay? Does that make sense? Or the Walmart store, you name the company. Okay? Amazon. Okay? Right? They got the same stuff. So if there's an error in the ending inventory of 1 year, guess what's wrong with the next year's beginning inventory? Exactly the same thing. That's all you got to know with this. Okay? Could you have an error in the beginning inventory and in the ending inventory? Yeah. All kinds of, you can have errors in the purchases. Right? You have errors in cost of goods sold. You can have errors in inventory. Okay? So let's take a look at this. What would happen with this thing? This isn't as bad as it looks. What I want to know is for assets, liabilities, equity, you guys know about this stuff, revenues and expenses, what's wrong with them if I have inventory errors? Okay, now let's think about what happens in terms of the inventory though. One of the expenses is named what? Cost of goods sold. So if cost of goods sold screwed up, so is expense, right? Everybody agree? Total expenses would be wrong, which would make net income wrong. And then one of the assets is, of course, inventory. Right, everybody? We know that, don't we? Okay, so let's think about what happens in the cost of goods sold portion of the income statement. What do we have? For cost of goods sold, what do we have, everybody? Beginning inventory plus our purchases is what? Available. And then if you subtracted your ending inventory, what would you have? This looks familiar, doesn't it? We just did it. Same stuff. Okay, cost of goods sold. It's just going to make you think a little. And we're going to do 2 years. Okay? We're going to do 2 years on the income statement too, okay? That makes sense? And then we'll obviously have 2 years on the balance sheet too, really. Okay, so let's see what happens here. It says at the end of 2012, so I'm doing 2012 and 2013, okay? 2012, 2013. At the end of the year, ending inventory in 2012 was understated by 3,000. So this number is too low, got it, by 3. If I say nothing about the beginning, it must be okay, the purchases must be okay, the available must be okay. Sound okay? All right? So the ending inventory here is too low by 3. What do you bet in 2012, and then we'll do 2013. What do you bet the inventory is too low by 3 here? I got one of the answers. Assets are understated by 3. It's true, right? I just gave it to you. Okay? So if liabilities have nothing wrong with them, guess what's wrong with equity? It's also got to be understated, right? Both of these are understated. Right? It's got to be. It's got to be the same. Just let yourself relax and do it. How to get understated? Well, net income's too low. How did that happen? If you subtract too small a number, if the beginning inventory is right, the purchases are right, the available is right, okay? And you subtract 3,000 too little, what happens to your cost of goods sold? You subtracted too small a number. What do you have? Too much. You overstated cost of goods sold. Oh, if you overstate cost of goods sold, that's one of the expenses, right? So expenses are overstated. Which does what to net income, of course? It understates it. Which does what to equity, of course? That's how it got understated. Ta-da! Everybody got it? Okay, now you got to be careful with this the next year. That understatement stays in the assets, doesn't it, in inventory? That understatement stays in the equity. Retained earnings is there. Does the understatement stay in cost of goods sold? Well, no, you closed it to retained earnings, didn't you? Okay? So let's do the next year. But be careful when you do the next year. Before we start on what's wrong with the ending inventory, what's wrong with the beginning? The ending of 2012 is too low by 3. Guess what's wrong with the beginning of 2013? A millisecond later. It's what? Well, it can't be over. It's too low by 3. If it's too low at the end of 2012 by 3, just for that beginning inventory, it's too low by 3, right? So it's understated by 3. Everybody agree? The beginning inventory is understated by 3. And then if my purchases are okay, what's that going to do to available, guys? It's going to make it understated by 3. And assuming my ending inventory were okay, what would you think that would do to cost of goods sold? You have too little available. You subtract the right ending inventory, what would happen to cost of goods sold? It would be too low by 3, wouldn't it? The error would correct itself between the 2 years. We still care because it screws up the 2 years' income, right? But yeah, that would make your cost of goods sold too low. What would that do to your expenses up here? Too low by 3, understated. Now that's not the answer. That's just from that one error. And then what would happen to net income? Too little expenses, what happened to net income? 3 too much. So it'd be understated on net income too, right? And then what would that do? That mistake would fix the next period. And everything would be fine in equity. You have too much income or too little income one year, too much income the next year by exactly the same amount, add the two together, what do you have? Nothing, right? No error. What would be wrong with the assets if the ending inventory were okay? What would you say is wrong with assets at the end of the next year? Nothing, right? Okay, but that's not quite what we did, huh? It says the next year ending inventory was overstated by 5. So I made this a little tougher, didn't I? So the next year ending inventory is overstated by 5. What did that do? I'm subtracting 5 too much, which will do what to my net income? Don't look at the available for a second. Just look at the ending inventory. If you assume the available was fine, it's okay, and you subtract 5 too much, what does that do? Makes your cost of goods sold what? Too low by 5. Huh. What's 3 plus 5? Too low by 8. It is, isn't it? If I have too little available and then I subtract too much, right? My cost of goods sold is going to be 8 too low. So in other words, this understatement here, right, is going to go with another understatement of 5. which is going to give me another overstatement of 5. Or understate, I'm sorry, another, yeah, it's understated, it needs to be higher. Say that right? This needs to be lower, understated. This needs to be higher. It needs to be higher, it's understated. Yeah, net income's understated. Okay, so it's 8, isn't it? So when we add the two together, this should be 8 too low, okay, understatement. All right, and this is 8 too high. Did say that right, didn't I? Darn it, understatement. This was overstated. If you understate your cost of goods sold, you overstate your income. Come on, okay? Turn your brain inside out. So what do I do with the answers? Let's think about what happens to the asset, inventory. What's wrong with inventory at the end of the year? We said it's overstated, right? It's overstated by 5. So I'd have to say 5 again, overstatement. So the asset's pretty easy. So 3 understatement in 2012, 5 overstatement. And nothing's wrong with liability. So what do you think's wrong with equity? If I'm 5 overstated at the end of 2013, where am I going to be on equity at the end of 2013? If liabilities are 5. Liabilities plus equity equals assets, right? So this is going to have to be overstated by 5, isn't it? How do we get there? Here's the deal, you guys. Think about retained earnings, one of the equity accounts. What's going to happen? The first year, what did I do? It's too low by 3, right? Be a debit, effectively. The second year, what happens? It's too high by 8. What's the difference? Too high by 5. You don't close that, right? So it'd be overstated by 5. A little bit difficult, huh? This is to turn your brain inside out. Yeah.
Why would that 8 not be a 2?
Well, because they're going opposite directions. The understatement at the beginning of the year causes cost of goods sold to be too low. The prior year, it caused cost of goods sold to be too high because it was in the ending inventory, right? But when you put it in the beginning inventory, it has the opposite effect. You add the beginning and you subtract the ending. It has the opposite effect. So those two errors corrected each other, basically. That makes sense? Okay, but it's in different years. So 3 understatement of income in the first year caused a 3 overstatement the second year. Make sense? Okay, and then we got another 5. Now what did the 5 do? If I overstate my ending inventory, I subtract too big a number, don't I? Which makes my cost of goods sold too low. This is what drives you nuts with this. The beginning inventory and the ending inventory have the exact opposite effect. Right? Because I'm adding the beginning and I'm subtracting the ending. Those of you who go on to intermediate, I'll drive you crazy with this stuff, okay? So this is sort of the tip of the iceberg on this. There could be all kinds of mistakes, okay? And there'll be a few of you that do that, I bet. Actually, what's funny is some of you guys will come and see me in a couple of years when you're graduating and say, I don't like my job opportunities. Do you think I could be a CPA? And they'll laugh and they'll say, sure, just take the accounting class, take the CPA exam, and you can make 50 grand too. I'm not kidding. It happens all the time. Get a lot of people in the MBA program that start the MBA and they decide, I'm going to be a CPA. It's just bullshit for a living, you guys. Would you like to be paid well to bullshit? If you're a communications major, man, it's a great major for you. Communications and accounting, when all we do is talk for a living? Oh, yeah. If you're an English major, I talked to a kid the other day that's an English major, now accounting. Is that you? Yeah, if you're going to do accounting, I'm a crazy person. Yeah, with English. Nobody's going to want to hire an English major, are they? Writing? What advice did I give you? Don't let anybody know you're a good writer, right? They'll make you write everything. Yeah. The accountants are notorious at bad writing. They'll find out you're good anyway. You start writing memos. Stuff. You'll just read your emails and they'll know you can write. You can tell I can't read mine, right? I'm too lazy to write. Okay? So, yeah. I used to be able to be a pretty good writer, but not anymore. Okay. All right. So how long are we going to go today? Want to go a little later than 4? You want to take a break? Go a little later than that? How many of you can stick around? Cover more stuff. Okay. Why don't we, because you guys came later. Let's take 5 minutes. Everybody breathe. Wander around. And then we'll do some stuff from the other chapter. Okay? We can do another hour and a half. I don't care. or as long as you can stay. I'm gonna do 6 o'clock with the executive MBA anyway. They're still trying to get down debit equals credit, left, right. Driving me crazy.
So let's do the periodic.
Oh, okay. They're really, really easy. These are in great order now. I'm glad you guys are good at YouTube. Yeah, these are pretty easy. So periodic FIFO and professional FIFO would be the same, right? So what we do, is we say, okay, with FIFO, first in, first out, I'm always selling the old stuff and keeping the new stuff. So do you agree that we have 20 units left to see? So what we did is we took the beginning inventory, we added what we bought, we subtracted what we sold, okay? Just in units. And you get 20 units. So what you do with periodic is you pretend you bought all of it before you sell it. So I bought it. So what I had was I started with 20, maybe you should go back to that sheet. So I think I can actually find it. Yeah, there it is. Okay, I started with 10 units. I bought 20 that cost me $420 because they were 21 each. Then I said I sold 23, and I have to calculate how much that is. Question mark, see it. I bought 25 that cost me $550 total. Then I sold 22, right? I need to figure that out. Then I bought 10, right? They cost me $230. Got the idea? So there's all my purchases. So I've got, okay? So what I'm saying is, look, I got 20 units. What did they cost? My ending inventory would be what? The last ones I bought. So here's my most recent purchase, 10 at 23. And then I just need 10 more, so I go back to the next purchase before that. Make sense? And that's it. See? So I've got 10 at 23, and I got 10 at 22. That was the purchase right before that. So it's real easy. It's just, what were your last ones you bought? What were the last 20 you bought? That's fine. Okay? And then everything else you sold. So you just take what's available less that amount. You're there, huh? What would you do with LIFO? You pretend you bought everything, and then you sold the most recent ones. I know we haven't even bought them yet, but we pretend we sold them. Okay? So when I do LIFO, wherever I did that, petrol. Okay, when I do, let's do it right here. When I do LIFO, last in, first out, I pretend I sold these 10 down here, even though I don't have them yet. Because I don't keep track of when I bought them and when I sold them, okay? I just know what my ending inventory is. And I know what my total purchases were. And I know my beginning inventory. So what I do is I say, okay, if I'm using LIFO, last in, first out, I would have sold these, I would have sold these, right? What would I keep? The 10 from beginning. So I'd have 10 at $20, and then I'd have 10 more that cost 21, and that'd be it. 410 bucks. Is that right? 10, yeah. So we got 410. Take your total available, less that inventory, and you got it. For weighted average, what would we have done? Weighted average. There's the periodic. There it is. Okay. On weighted average, I have 1,400 available. That's my beginning inventory plus all my purchases. The units, beginning inventory plus all my purchases was 65. I divided it in, it's $21.54. 20 of them at 21.54, my weighted average. And then the cost of goods sold, of course, would be the 45 I sold. So you can go back and watch this beginning of this. Get the idea? Okay.
So you just got the 20, do all of them from the inventory units.
They're all 20, yeah. That's because it's the same company with different accounting methods. They physically have 20. And then they physically bought, how many was it, guys? 45. Available 65.
So it's just
Something
the
like that, whatever.
units you bought.
They had 10 at the beginning and they bought 55, that's what it was.
Just
Right.
the units you bought minus the units you sold.
Well, you sure include the beginning inventory. What you start with plus what you buy is what you have available, and then subtract the ending, and you got it, okay? All right, let's do some depreciation. We'll do the same thing. Let's calculate the depreciation. You guys got the energy? No. You want to do it anyway? Yeah. Okay. Turn you guys into machines. Okay, here's what I want you to do. Let's do a 4-year life, so it's nice and short, huh? Okay, let's do a 4-year life. Let's say I have a piece of equipment or a building, it doesn't matter. But 4-year life, let's make it a piece of equipment. Okay, I can't imagine a building that wouldn't last longer than that. Let's make it 100,000. Let's make my salvage value, I don't know, be 15,000. Is that going to make the math difficult? Okay, fix that for a second. Let's fix this. Did I kill my thing? No, you gave me no. Okay, so equipment, 115, and salvage value is 15. You like it? So what's my depreciable value? 100,000. I won't tell you the depreciable value in the problem. I bet you can figure that out, right? Take your equipment less your salvage value is your depreciable value. Let's give it a life of 4 years. Okay. Everybody good? And let's say the units it's going to produce over its life, units estimated, right, that they're going to produce. So one life would be 4 years. Units estimated are, I don't know, 20,000 units. Everybody got good with that? And let's do different methods. One is going to be straight line. 2 is going to be double declining balance. That's 200% declining balance, right? 3 is going to be units of production. And 4 is going to be sum of the year's business. And I think what we'll do is tell you that the units actual for year 1, 2, 3, 4 are 6,000, 5,000, 4,000. How many have 15 and 6,000 for some reason. Okay? That's what they did. Okay, what do I want to know from you guys? For each of the years, give me what? Depreciation expense and accumulated depreciation. And book value. And that's it. For all 4 years. Could you do it? The problem we just did, right? Class today. Go. Do all of it. Bet you can do it. You have been working a lot of homework problems, right? There's 2 questions on this quiz today. How to cover it in class or a review session. That's fun. Make sure you read. Pay attention. Work problems. Kids, you can learn on your own more. Did you get that over under thing? Or that? Yeah. It's really annoying, isn't it? That's crazy. Yes, yes. I'm gonna ask you, these are actual, okay, that's the actual, this is the estimate, that's the actual. Okay, so the same year, estimate's 20, these are all actual, they're 6546. Okay, good. And just figure out what I did from the YouTube video from last week. I didn't push publish again, it just sat there. It's published next to it, highlighted. Sorry about that. Are we good? How close to get? More time. Go ahead, keep going. Cover that good. Be sure and work the questions of the quiz that we're not going to get to. Okay. We'll get to whatever we do. got answers? Should we just write them down and make sure everybody's got the same ones? Maybe some up. When you don't, we'll work it. Okay. What do we get for depreciation expense? 100 divided by what? 4. It's 25,000 every time, right, guys? Which makes every one would be 25. Okay. Accumulated depreciation, it would do what? 25 plus 25 is 50, plus 25 is 75, plus 25 is 100 over the years, right? Always debit depreciation expense, credit accumulated depreciation. Good. Book value, be 115 less 25, right? For the first one, everybody do it that way? So what does that make it, 90?
65.
40, 50.
It's going to be points, you guys. 40 and
15.
15, which is the one we want. Yeah, I guess so. Which is what we wanted to have left, right? So salvage value. Excellent. Okay, double declining balance. It'd be 1/4 for 4 years, right? So you take it times 2. If it was 150% declining balance, take it times 1.5. So you do something like that. So, okay, times 2 equals 25% every time? 25% of what? Wait a minute. 50%. 25% times 2 is 50. Yeah, it still is. I apologize. Okay. What is it doing? Okay. So 1/4 is 25%. Take it times 2 is 50%. So it's going to be half every time. Let's make that easy, huh? Okay. So what are we going to do? It's going to be half of what? The 100 or the 115? The 115. Okay. So how much is that?
57,500.
Okay. So we start with 57,500 debit depreciation expense, credit accumulated depreciation. Everybody agree? What did that leave you over here?
Same thing.
How about that? It's always half. So that's nice. And then what would you do? We take 57.5 times 50%. How much is that? 28. 750. Debit depreciation expense, credit accumulated depreciation. Everybody good? No big deal, is it? What do we have?
86,250.
Okay. Subtract that from your 115, and what do you have left?
20,750.
Well, of course it is. Yeah, it's always taking half of it, right? Okay, so then you take half of that, don't you? And how much is it the third year? But we got to be careful. When you're going to stop at 15,000. So what are you tempted to take? 14,375?
Yeah.
But you can't, right? Because 14,375 is going to take me below 15,000. So what's the max I can do? What's left to get down to 15,000 if it's 28,750 now? How much? 13,750. And then what's it going to be for the last year, of course? Nothing. It's only got a 3-year life, less than 3 years. Okay?
How did you get that 13 number?
28,750 is where I'm at right now, and I don't want to go below 15.
Okay, so then you don't have to do, I guess you don't have to do.
If I did take half, it'd be 14,375, wouldn't it?
Right.
But that would take me down to 14,375, which is less than my 15,000. So you got to be careful. Don't go below your salvage value. Got it?
So do you just not put anything for the appreciation?
The fourth year's nothing.
No, I mean for the third year for the accumulated.
Oh, no. What's it going to be? 13,750 added to the 86,750, 86,250, right? Because we're going to debit depreciation expense, credit accumulated depreciation still for 13,750, aren't we? Add that to 86,250, and what do we have, of course? It's a miracle. It's our $100,000 number we were looking for. Got it? And then what's that going to leave me for a book value, everybody? 15,000, which is where we wanted to be. And then it'd be no depreciation in the fourth year, right? But what's the accumulated depreciation in the fourth year if you don't add anything to it? It's still 100, of course. And what's the remaining book value? It's the 115 in the equipment account less the 100. The more times you go through stuff like this and you think about it, look at different examples, you get firmer and firmer, don't you? This takes practice and repetition and confidence. That's kind of it. Okay, units of production. We got 20,000 units is the estimate, and we're going to depreciate how much? 100,000. By the way, on the double declining balance, you did remember to take it times the full amount of the equipment, right? And on all the other methods, we're using depreciable value, right? Okay, so units of production is how many? $100,000 divided by 20,000 units, what is it per unit? $5 per unit. That's it. Everybody see where it came from? And then what do? Year one was how many units? 6,000. And you want to be careful to do what? Stop when we get where?
15.
Yeah, this is 30K, right? 30,000. Debit depreciation expense credit, accumulated depreciation, this would be 30, right? Everybody agree? I guess I did it right. I don't know, 6,000 times 5. Yeah. Okay, what's book value? 115 less 30 is 85,000. Everybody got it? Then what will we do the next one? 5,000, we're up to 11,000 units now, aren't we? We're going to stop at 20. It's $5 is 25. And debit what? Depreciation expense. Credit, accumulated depreciation. What do we have now? 55. What's my remaining book value? Goes down by 55, doesn't it? Or by, I'm sorry, 25. It's 60 now? 115 less 55? Then what? 4,000 units. I'm still not to 20, am I? 4,000 units brings me up to 15, I guess. Times $5, how much is that? See you guys. Thanks for coming. Okay, debit depreciation expense, credit accumulated depreciation. How much do we have in accumulated depreciation now? 75. Fantastic. 75 away from 115 is what? 40, which of course is 60 less than 20 we just depreciated, right? And then what do we have in the fourth year? Be careful. You can't use all 6,000 because we'll be over our total depreciation, right? How many more can you do? We only want 20 total, so there's only what? 5 left? Okay, make 20 total times $5 is 25. Debit depreciation expense, credit accumulated depreciation, and what do you have? 100, and it's a miracle. We're exactly to our 20, whoops, to our 15, and we are extremely happy campers, right? Nothing to it. Okay, let's do some of the year's digits. What do all those digits add up to? 10. That's the easy one, isn't it? So what do you do the first year? 4 tenths. 4, right? 4 over 10. Then 3 over 10. Second year. 2 over 10. Third year. Right, guys? 1 over 10. Guess what? That's 10 tenths. It's going to be all of it. So what are we going to use? The 100, right? Depreciable value. 4 tenths is how much for the first year? 40,000. Second year? 30. Third year? 20. Fourth year? 10. 1/10. All that's going to add up to how much? It's 100,000, and we wanted to depreciate, right? Okay. So what's going to be accumulated depreciation? If you debit depreciation expense 40 and you credited accumulated depreciation for 40, you'd have 40 accumulated depreciation, right? Book value? 115 less 40 is 75, is that right? Excellent. And then we do it again. 30, debit depreciation expense, credit accumulated depreciation. We got 70, right? That's another 30 away from the 75. There's 45 left. Well, of course, it's 115 less 70, isn't it? You're seeing this, aren't you? Pound on it. 20 more. Debit depreciation expense, credit accumulated depreciation. What do you have now in accumulated depreciation? 90. By the way, why doesn't depreciation expense keep growing? You close it every year and start over at 0. Why does accumulated depreciation keep growing? You don't close it. Assets not gone. You don't close equipment or accumulated depreciation. You just keep adding to the accumulated depreciation and the book value goes down, right? And retained earnings is going down by the amount of depreciation expense. What's that? Oh, that'd be fun, huh? I might have something like that in intermediate. Explain what's going on. Yeah. Okay, so 90. What's left? 115 less 90 is how much? 25. This is working out wonderfully, isn't it? And then we got 10 more. It's going to make it 100. Ta-da. Debit depreciation, expense credit, accumulated depreciation. And we will have 15 left, wouldn't we? Okay, you want to sell some? Make journal entries, or we need to buy? Gains and losses? We can do it. We can do a couple, or we can do a couple of problems on the quiz instead.
Okay, units of production, and you got the 25. How did you know it needed to be 25 again?
Because I want to stop when I get down to 15 book values.
And that's depreciation.
So I had to stop.
Because I sometimes get confused and think you don't depreciate past the book value.
I was supposed to do that.
Well, you don't go beyond the salvage value. You don't depreciate past the salvage value. Stop. Okay? So you guys okay with gains and losses that we did today? Is that pretty clear? Pretty simple? I mean, we could pick any point in any of these, right, and have a gain or loss based on it. Do one? No. Maybe, that'd be tight, too. I'll tell you what, if you can do that, you can nail number 1, 2, 3, 4, 5 on this quiz. So you do this one, this would be nice practice. Notice it's 150% decline balance. What's that? Yeah, on quiz 8, 9, the first question is do straight line and declining balance, but you could add the other methods if you want. You can get some numbers in production. Let's do this one. Number 2. There are several questions here. This is worth doing. If you want to take the time, you got the time. Want to and got the time. Thanks for coming. I pay off you. Right? Let's do something. Number 2 says, I'll read it to you if you don't have it, it's fine. Hayden Corporation sold a piece of equipment for $55,000 cash. And I'm going to want you to give the journal entries at the time of the disposal. They sold it for $55,000 cash. What are you going to do? Debit cash. Now let's do the obvious, right? This is number 2 on that quiz from summer 2013. Okay? Debit it for $55,000. I know I'm going to do that. The equipment had been purchased on January 1st, 2009 for $200. Wouldn't they have debited equipment for $200,000 at that time? And now you get rid of it, what are you going to credit? Equipment for $200,000, right? So just relax and do them. Does that make sense?
Which?
You pay $200. This is number 2 on quiz 8 and 9. 8 and 9. You didn't pull that one out? Anyway, okay. It's out there. It's in Google. Okay, so what I said was that they got $55,000 for something they originally bought for $200. All right, so you got rid of it. What else are you going to have to get rid of? Everybody. What do you think you're going to get rid of? Accumulated depreciation. And the difference between the book value, which the book value is equipment less accumulated depreciation, right? You know, if it's more than 55, I have a loss. If it's less than 50, no, I'm sorry. You know, if it's more than 55, I have a loss, right? Book value. If it's less, I have a gain. It's exactly appropriate. But this gets a little harder. It says it had an estimated life of 6 years. So the life was 6 years, okay? And I sold it June 30th of year 13, 2013. It was purchased January 1st of 2009. Ah. And then it says it has a 20,000 residual. Oh, no. Cost is 200, right? Residual or salvage value is how much? I said 20, did I? 20? What's the depreciable value, everybody? 180. Okay. So, they've been using straight line. Has a year end of December 31st. Year end is 12/31. Huh. So how many years have they depreciated this thing? Year 9, 2009, 2010, 2011, and 2012. Am I right? Through December 31st, 2012, 4 years? Somebody said 4, didn't you? Okay. 4 years. How much is it each year? It's 180 divided by what? 6, right? So how much is it per year, guys? 30,000. Would you guys agree with that? 30,000 per year for 4 years. How much is in accumulated depreciation? I would have debited depreciation expense and credit accumulated depreciation $30,000 4 times. Wouldn't I have 120,000 in there? You bet I would. So I have got accumulated depreciation right now, as of December 31st, year 12, of 120,000. You guys good? But that's not how much I'm going to debit accumulated depreciation for, because what else do I need to do on June 30th of year 13? I get another half year depreciation, don't I? From December 31st through the end of the year, right? Or through halfway through the next year is going to be how much? If a year is 30,000, you guys, what's half a year? 15. I'm going to debit depreciation expense. Oh. and credit accumulated depreciation. Isn't it amazing how it keeps managing to find some way to make things harder? It's easy. Life gets harder. Okay, you like it? So what's that going to do? I just added accumulated. This is the first entry, by the way. That's the first part of that problem. You're supposed to have that. Debit depreciation expense, credit accumulated depreciation. To get it depreciated up to the point when you got rid of it. Happened to be half a year, whatever portion it is. And then what would you do when you sell it? Well, you got to get rid of what's in accumulated depreciation, don't you? How much is in there? You just put 15 more in. 120 at 30,000 a year for 4 years, right? It's the 120 that came in there. Everybody see where that came from? It's going to be 30. We do it 4 times, 4 different years. You guys with me? That's the 120 that's in there. 2009, 10, 11, 12. Okay? And then this is the one for this year. That's this one. So 135's in there, isn't it? Oh! So I have to take accumulated depreciation out of 135. And now what happens? What's the carrying value, book value of this asset? 200 less 135 is 65, so what do you have? Loss on sale. How much? 10? That's it. Ta-da. Oh, that is a different twist, huh? Well, there was a real hard one thrown into this quiz, and then you go to number 3, and it's just ridiculously easy. You just never know, do you? Life's kind of like that. You know, sometimes you got a tough one, sometimes you get something easy. Make sure you get the points on the easy one. But I'd like to see you get that one too if I give it to you. I have no idea what's on the quiz, but it might be there. Number 3, give the required adjusting entry at the end of the annual accounting period for the 2 items below. Okay, Poe acquired a patent at a cost of $8,000 on January 1st, 2012. It's registered in 2006, and it had a 20-year life from 2006. So how many years have gone by? 6, 7, 8, 9, 10, 11, right? How many years have gone by? 6? Is that right? And they got it January, is that right? 6, 7, 8, 9, 10, 11. 6 have gone by, right? So how many years are left? 14 years. There's 14 years left, and we use straight line amortization on patents. Read about that, right?
Thanks.
See you. You bet. Keep working. Confidence. Okay, all of you guys. So what do we got? It was 20 years, but there's only going to be 14 years left. It cost $8,000. So what would you do? Take 8,000 and divide it by what? 14 years. What does that give you? Amortization per year of this patent. They're going to use it for the remaining legal life, right? If they're going to use it for less than that, I'd use it shorter term, right? I'm certainly not going to go more than its legal life, but I'd go less if I plan on using it for shorter period. What's 8,000 divided by 14? Anybody?
571.
5, 7, 1. If we care. So what would you do? Debit amortization expense. No kidding. 571.43. And credit what?
Accumulated amortization.
It can be accumulated amortization
Or credit patents.
or just credit patent directly. Accumulated amortization on patents, guess what kind of an account that is? Contra asset. If you want to keep track of how much has been used up, sort of like accumulated depreciation, you can do it, right? Or you can directly reduce the patent. Most people just directly reduce the patent. So there's A. You're going to get these, aren't you? You actually did some homework, some problems, just like this, huh? Just like this. So do a bunch of stuff, you guys. Keep working. Acquired a gravel pit for $30,000. I bet they debited gravel pit. They don't own the land. They own the gravel. Everybody good with that?
Is that natural resources?
You got it. It's a natural resource. So I bought the oil into the ground. I bought the coal in the mine. I bought the gravel in the gravel pit. I don't own the land. Nowadays you're going to reclaim the land, right? You're going to dig it out. I used to live in an old coal mine. Did I tell you guys that? It's absolutely beautiful. It's an old coal mine. It was in Terre Haute, Indiana, and they'd done strip mining, and they didn't have to replace the ground at that time. And it made this really nice little lake, and there were trees all the way around it. The only thing was when the kids swam in it, they got coal dust on them. they'd come out, you know, with flakes of black all over. It's hilarious. So the kids would have their friends over, and we'd have to hose them all off after they got out. It wasn't a lot, just a little, but anyway, yeah. The coal is what you own, right? Not the land. Now you have to reclaim it. Have you ever seen reclaimed gold mines? It is the ugliest thing. They take out the top of the mountains. You can go to western Kentucky and see it, eastern Kentucky and see it. They level up the mountain and just level it, put grass in, and call that reclaimed. No trees, nothing. They would have been better with the hole and watering it. It could be a tourist area, you know. But yeah, it's just horrible. Oh well, that's reclamation. All right, so I guess we could plant hay on it or something. Flat, I don't know, someday. All the soil's destroyed too, so that's different. All right, anyway, so we could do this, and then what would we do with this one when we're using up, how much we were using up? It says 90,000 are going to be extracted. What's that? 30,000 cost divided by what? 90,000 tons. How much does it cost per ton? Was that 33 cents? 33 1/3 cents per ton. You guys good? Per ton. Okay, that's just for that. Of course, they have all the other costs of extracting it. During 2012, 10,000 were extracted. So what's a third of it? So it's a third of the 30,000 or 10,000, right? Did I say that right? No, it's 1/9. 1/9, 10,000 out of the 90,000. So 1/9 of it. So you can take 1/9 of the 30,000, or just take this times 10,000 tons. And how much are we going to have for expense in this period? 3,333.33, right? That's what it is, isn't it? Yeah, but what? Depends on where it goes. It was sold. I'm going to have sales recorded for this. It's going to be much more than that, because you also had to, you know, dig it out, haul it, and all that. So it's going to be far more than that price. But that's what, just for the gravel they paid, right? Yeah, but what? Sold it. Well, I debit cash or accounts receivable. Debit cash or accounts receivable, and credit sales. But that'd be for the sales price. So, you know, that might be, I don't know, $20 a ton or $50 a ton. Oh, it's cost of goods sold, yes, for 333, I guess. And credit what? How about gravel pit? No kidding. Whatever the natural resource is, it's being used up. Okay, what if I'm using it myself and manufacturing my product instead? Now it's depletion expense. You saw that in the chapter. So this is a little tougher. It has to go to cost of goods sold. The depletion expense is fine. Okay? I would have taken depletion expense or cost of goods sold if they want. Okay. Got another 10 minutes in you? Sure, why not? I don't know if I do. But I have to use deferrals again tonight. Can't do that in my sleep. MBA's business. Doesn't matter. Saddle Corporation purchased the equipment to be used to manufacture. The purchase was made at the beginning of 2009. They paid $210. You guys don't have this stuff. Some of you do. Some of you don't. Yes, you do. Oh, you guys. Oh, okay. You don't. Okay. The original cost of it was $210, and they paid cash. Okay. So the cost of the equipment was $210. This is number. Next one, number 4. Still on that summer quiz. Okay. Cost is $210. See it. Has a residual value or salvage value of $10,000. How much am I going to depreciate? $200,000. Big deal. Okay. All right. It says 10-year life. So just pulling this stuff out of the problem. You get so you can read these problems and pull out the pieces you need. They're pretty easy. Okay, at the beginning of 2012, they concluded the total useful life would be 7 rather than 10 years. Okay, I am going to reduce the life by 3 years to 7 years. Okay, you got it? Reducing it by 3 years. We don't go back and restate the prior years. It's a change in estimate. We're just going to do it in the current year and forward into the future, respectively into the future. Okay, the residual value is going to be 0. I'm going to reduce the life to 7 years and reduce the residual or salvage value to nothing. You guys good? So 2 changes. They use the straight line method. So it's been 10-year life, straight line, and we're going to stay straight line. And what it wants is make the journal entry to record the depreciation for 2009. Oh, I bought it in 2009, beginning of 2009. And at the beginning of 2012, I make this decision. How many years have we depreciated it for? 9, 10, and 11? 3 years, right? So let's figure out, what do we have in accumulated depreciation? What did we do? So the first thing it says is make the journal entry for 2009. So what's that going to be? Debit what when you record depreciation? Depreciation expense. Okay, good. And credit? Accumulated depreciation. Big deal. Okay? How much? What were those first 3 years like? I had 200,000 in 10 years, you guys. What do you think? 20,000. You guys agree? Per year. For 3 years. What's the balance in the account? 60. Yeah. So I put 20,000. So the first part A, all you had to do was tell me what the entry would have been that year. Okay? All right. Then let's look at what's in the account now. What's in accumulated depreciation? 60, because we put in 20 the first year, 20 the second year, 20 the third year. We would have 60 grand in there, wouldn't we? What's my remaining book value? Careful. 210 less 60 is what? 150. I got 150. So now the remaining book value that I'm going to depreciate is 150. You guys with me? The 150,000 at the beginning of 2012. That's where I'm at. And that 150,000 that I have at the beginning, how much salvage value am I going to take away from it? Nothing. So if it was 10,000, take away 10. If it's 5, take away 5. Got the idea? It's nothing. So what's my remaining depreciable value? 150. How many years am I going to do it over? Let's see. Be careful. It's not 7. It was a 10-year life, and how many years went by?
4 more years.
3, so there's only 4 left. Everybody see it? It was a 10-year life. We've used up 3, so that took us down to 7, and now they say, oh, the whole life was supposed to be 7. It's not 7 are left. If 7 are left, we wouldn't change. Well, I guess we change a little because we don't have salvage value, right? But they're saying the whole life is going to be 7 instead of 10. So it's 4 more. Absolutely right. Divided by 4 years, straight line, how much is it every year? 37.5. So it wanted the journal entry for 2012. So this was 2009. It's also 2010 and 2011, right? This is 2012, which is also going to be the next 3 years after that, right? Going to be the same. Debit depreciation expense, how much? 37.5. We just calculated. Credit what? Accumulated depreciation. Excellent. 37.5. Okay, so where are we going to be? We have 60 in there, don't we? So let's figure out what's going to happen. If I've got accumulated depreciation now with 60 in it, and where do I want to get to at the end? I want it fully depreciated, right? No salvage. What's it going to be? What was the original cost? 210. So I want my accumulated depreciation to be 210 at the end. You didn't have to do this for a problem, but just to show you, right? So this is 3 years here, right, guys? That's the first 3 years. Let's put in the next 4 years. And what do we say, 37.5 per year? Let's add 37.5 per year here. 37.5 once, twice, thrice, quattro. What do we got?
150.
It's a miracle. And what's the remaining book value? If you have a 210 asset that you depreciated 210, 0. Good. You guys could do this, couldn't you? There's one more, number 5. Yeah, and then it gets into the next chapter. So that's the end. All present value stuff. It's going to drive you crazy in the next chapter. So I just love driving students crazy.
This is over chapter 7 and 8.
Yeah. One quiz on 7 and one quiz on 8. They're 2 separate quizzes.
So on Wednesdays you start.
No, both of them on Wednesday, half an hour for each.
Oh, we're doing two for the,
2 quizzes in one day.
so the,
Yeah, okay.
oh,
Yeah,
the-
no, come ready for both of them. That would be a mess. Okay, anyway. So, these guys, what this problem does is it shows you how much, it asks you,
Is there
how
a
much
class
would you
here?
put in land? What's that?
Is there a class coming in here?
I don't know.
Something
somebody just peeked in.
Would you stick your head up the door and say, are you having a class? Maybe they're waiting to get in at 4:30. If they are, we're getting out of here.
There's just one person.
Yeah, they might be waiting to get in.
So we're more board.
Maybe they're looking for a place to study or something. Okay, we have land improvements. Land improvements. So this is the deal where I'm spending a whole bunch of money developing a project. You could have equipment too. This is number 5 on that quiz.
I don't know where she went.
Oh, okay. If they come back, we'll split really fast, okay? Anyway, land improvements and building. It just asks you what's the total dollar amount that goes with each. So let me read this stuff and you tell me what is part of which, right? There's some problems like this in the chapter. Chapter talks about it, right? You know, so purchased a parcel of land for $12 million, paid transfer fees of $50,000, and graded the land at a cost of $250. The way I think I'd do this is I'd put land in one key account and add them up, improvements in another, sound good? And put building in another. Okay, all right? So what do you think the buying the land goes in? Come on. 1,200,000 goes here, don't you think? That's the land itself. Transfer fees to get it transferred to me. Part of my cost of my land. Absolutely. I didn't get a building or land improvements for it.
Those are capitalized expenses.
Yes, capitalized versus expense. All that means is debiting an asset. You capitalize, you debit an asset, you expense, of course, you debit an expense account.
Like it just becomes part of the acquisition cost.
Yes. And the land is never going to be depreciated. We keep it forever, right? Okay. The improvements in the building will be. Okay. All right. Let's see. And then they also they graded the land at a cost of $250. Now, what you have to decide here is that a land improvement or is it permanent? I think that's permanent. You leveled it off. You're not going to unlevel it, right? So you level it off so you can build on it. I think that goes here. Ah, right? 250. But they paid 210 for a parking lot. What do you think about that? That's improvement. It's not a building, it's a parking lot. And do parking lots last forever? No. Does leveling the land off last forever? Yes. Got the difference? That's it. Security fences. Fences. Lighting. Over the next 2 years, they excavated and poured a foundation for the warehouse. That includes moving dirt around, right? But it's not permanent. It's for the building, isn't it? So they're putting in the foundation. That was $200,000. What do you want to do? That's building. Yeah, absolutely. Okay, and then construct a warehouse for $4.3 million, including $300,000 for the design plan. $4,300,000. What if it didn't include it? Well, then add it, right? But it did include, right? It's in there. Okay. Additionally, they incurred $250 for interest costs. Now, this is hard. What is interest usually? Interest expense. What is it during construction period? Part of the cost of building. If I bought this building from somebody else instead of building it myself, you think they charge me for the interest? Be included in the purchase price, wouldn't it? So you can capitalize interest during the construction period. How about right after you finish the building and you start using it? What do you do with the interest from then on? Expense every period, because it's a cost now of using the building and generating revenues. This building's not ready to use to generate revenues, so we're capitalizing the interest during that period. The 250 goes there. Okay? That's it. Add them up, and you got your answers. So out of that total, I don't know, 1,000,005 goes here. That would be this answer up here, right? Land improvements are 270. That would go up here. And what is that? 4750 goes up here. Ta-da. Did you do this? I'm sick of you guys. Go. I know you're sick of me. Way to hang in there. Keep working, keep working, keep working. How much are we through now? This is chapter 8, and there's only 14 plus an appendix. We're over halfway. Wow.
Still here.
Yeah, still going.
So that FIFO thing, I'm still,
Easy one.